What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. In today's video, we're going to cover the overall market. We will also cover the SoFi stock. And guys, I hate to bring the bad news to you, but I have to get you guys prepared for that CPI report on Friday. We're less than 36 hours away, and I told you guys specifically every single day this week does not matter. We literally had a green day Monday, a green day Tuesday. Today, look at that. All the gains wiped out today. What was the headline? The headline was inflation fears. The media started running with the inflation headline today, guys, and we pretty much sold off 1% on the indexes. So you are now less than 36 hours away from that CPI report Friday morning. I'm here to get you guys prepared. And this information that I'm going to provide to you today, it is pretty ugly. I want you to know that I did not write these articles, so don't blame me. If you find any of this information useful, be sure to subscribe to the channel. We will be keeping you updated daily. Be sure to smash the like button for the YouTube algorithm, and don't forget to drop a comment. I'm going to be commenting back to as many people as I can. Let's get into the video. All right, guys, everything was fine and dandy Monday and Tuesday, and now look at the headline. Stocks break two-day winning streak as inflation concerns persist. This is what they do. They try to get people to, buy calls and, have the market run up, and then they're trying to flush people out right before the CPI report, data even comes in. U.S. stocks drop on Wednesday with S&P 500 and Dow giving back gains after rising for back-to-back sessions. S&P 500 fell 1% on Wednesday, while Dow, S&P 500 both lost more than 0.7%. So, guys, we can see all the indexes were in the red, but look at what I was just covering yesterday. I said I'm tired of seeing this oil rise. I believe this is really bad. Look at that. Crude oil up another 2.6%. $122 a barrel heading into the CPI report. And you can see they just continue to run with that headline. Get ready for $150 a barrel oil this summer. So the next, 1 to 2 months could be really rough, on gas prices. We could be looking at $6, nationwide very soon. So this is terrible heading into Friday. SoFi Technologies got, hammered today. No bad news at all. Nothing at all. Down, 3% on the day. Right now, I can't believe it. I got 100 growth stocks on the list we're going to show you. Fintech is the worst performing stock heading into the CPI report. It does not get worse than that, guys. I can't believe it. I believe that has to do with the two bad headlines that came out. Affirm, buy now, pay later, and then Robinhood, payment for order flow. SoFi, not in either one of those, business models. They have a little bit of payment for order flow, but SoFi is just a different type of animal. They beat earnings 9 months in a row. It just doesn't matter. I'm sorry to say it. Does not matter. They are getting looped into fintech, and fintech is getting destroyed right now. On the other hand, Anthony Noto continues to buy $112,000 worth, $6.65 a share, 16,900 units. I'll just tell you guys what the bears are saying on these buys. The bears are saying Anthony Noto is manipulating people to follow him and, bring confidence. He's a multi-millionaire. These buys are absolutely nothing. He's just doing this to bring investors confidence, to hold the stock up for more stock-based compensation. That's what the bears are saying. But I personally believe if Anthony Noto was really, really bearish on the SoFi stock or the overall market, he would cash out a million plus 2 million shares. That's 10, 20, $25 million. Why wouldn't he sell and rebuy back in or something like that, okay? He's not profiting right now. He could profit $20, $30 million. He chooses not to do that. He continues to add shares. So I believe he thinks earnings are going to be good again, okay? But that's what the bear thesis is. The bear thesis is Anthony Noto is manipulating people right now, buying shares each week to bring investor confidence to hold the stock up as long as possible. So you got to take your pick, okay? As you can see here, we have 105 growth stocks. GameStop, Upstart, Affirm, Robinhood. Take a look at this, guys. Out of the 105 growth stocks, Upstart, Affirm, Robinhood finished on top of each other, guys. You're telling me that's not an algorithm? How does each and every investor inside of those companies, shares are different, the stories are different. How are each one of those stocks finished right on top of each other, 3 to 4%, guys? There is an algorithm computer trading these stocks. Majority, just overpowering retail, and they go wherever the algorithm is. And as you can see, the algorithm hates fintech right now. Fintech is the worst investment heading into Friday CPI report. It just sucks. SoFi is getting looped in. We just go a little bit higher. 97 out of 105. SoFi's down 3% today. It just sucks, okay? SoFi has beat every earnings. These companies are not doing that, okay? It's just your earnings don't matter, okay? Being profitable doesn't matter. Amazon, Facebook, Microsoft, Apple, those are down 20 to 50%, okay? Profitable doesn't matter. It does nothing matters. It's just I'm trying to tell you guys fintech is the worst performing stocks right now. We'll go all the way to the top. DraftKings announcing a partnership. Roku trying to partner with Netflix. Nikola, I believe, partnering with Walmart. So companies that are releasing partnerships right now are getting a nice little boost. And then we have JD, Spotify, Central No One. So some stocks are doing good. 3 to 10% gains. It's just we are not in that category right now. And once again, it does really suck. As you can see, oil jumps to 13-week high on rising U.S. gasoline demand. This is absolutely terrible. Oil prices rose 13-week high on Wednesday. Gasoline kept rising despite pump prices. All right, guys, take a look at this. I need you to drop a comment and just give me what you guys think. Walter Bloomberg, White House says expects inflation numbers to be released at end of the week to be elevated. Does that mean the CPI report is already released and the White House has already saw it? Because you know how the White House, this administration does. They like to push off the blame from them as fast as possible. And you can see they're already getting people prepared for a terrible inflation report elevated, guys. So is the report released already? Are these numbers in the White House? Biden and the team's hand? Are they already seeing it and they're making the statement? Look at that, guys. I don't know. Why would White House say they expect it to be elevated at the end of the week Friday? I've been telling you guys, I just have a really bad feeling about these inflation numbers, okay? I know some of you guys have been saying real estate is rolling over, used car prices rolling over and stuff like that. I just don't think it's going to be able to keep up with gasoline and food and stuff like that. So drop a comment. Did the White House see the CPI report already? And is that why they're making a statement? Janet Yellen, stimulus spending contributed only modestly to inflation. So Janet Yellen looks like she is backing up the Biden administration, saying, this had a very, very small contribution to the elevated inflation, percentage over the past 8 to 9 months. So Treasury Secretary Janet Yellen on Wednesday defended the Biden administration 2021 stimulus package against criticism that it is to blame for high inflation. I didn't write this, okay, guys? This is CNN, so do not blame me. I did not write this article. I'm just telling you what Janet Yellen said, so maybe she's right or wrong. Drop a comment. Let's stir up a little bit of conversation because a lot of you guys are really smart, and I love when you put a detailed summary backing your statements. I enjoy reading them. I truly do. So this is Janet Yellen's statement to rising inflation. Stimulus didn't contribute. Now, if you are bearish for Friday and you think we're going to get a bad CPI report, it would be a great time to hedge your shares for SoFi or any stock that you are invested in, okay? And most likely, the simplest way people do it is they do, SPY puts, okay? Which is, a very common hedge that people use. But I believe if you want to, hedge for Friday, why not try to get the best return on your investment? What is going to go down the fastest? I can tell you right now, SoFi is not going to go down the fastest because remember, as SoFi goes up and other companies go up, it always lags. When it goes down, it always lags. Other companies drop way faster. I believe these three technology fintech stocks are going to drop way faster than SoFi. And this is number one, Coinbase, okay? I seen this stock drop 15+% on multiple occasions, okay? So this would be a great way to play the hedge for the CPI report because, they've already proven that, Coinbase and also any Bitcoin is not a hedge against inflation because, it's down from 70K to 30K, okay? And inflation skyrockets. So Bitcoin is not a hedge at all. So this one could drop really quickly. And also Upstart, this thing moves like a monster to the downside on nasty CPI reports. I mean, this thing goes 10 to 15% almost every time. I promise you I've seen it tank every single CPI report really fast. So Upstart, This thing moves up really fast on those green days because of the short flow, lower outstanding shares, etc. This thing moves to the downside much faster than SoFi. If SoFi's down 5, this thing's down 12 to 14 most of the time. And number 3 is Affirm. Understand these are some of the worst performing stocks today, but I'm telling you, on these CPI reports, these fintechs, these things move to the downside. So, if you want a small hedge, I would really consider weekly puts on the Friday this week in any of these three companies. I mean, everything's going to go down, of course, but why not? Why play SPY that's going to give you a 50 to 80% return when these types of stocks are going to give you a 2, 3, 400% return? Okay. And remember, it's high risk because if the market has a good CPI report, these are going to all go to zero. Your puts, your hedge is going to go to zero instantly. Okay. They're going to be worth nothing because Friday is the expiration. So understand, just hedge a little bit, okay? Just depends on, how much you're willing to risk, okay? A couple $100. If you're trying to go heavy, $1,000, you could potentially get a 3, 4,000 return if there is a collapse on the CPI report. But I'm not saying the CPI report is going to be extremely bad Friday. I'm just telling you right now, with these fintechs, move much faster than SoFi. That's what I've been noticing the past 3, 4 CPI reports. These things move on red days. So these are great hedges in my personal opinion. All right, guys, you saw the information too. I'm sorry that everything I'm telling you is pretty much bad news. I told you guys SoFi is going to have great earnings the entire year, the past 9 months, and that happened. It just doesn't mean anything at this point. Fintech is the worst performing sector heading into Friday. Hedge your position if you are bearish on the CPI report. Be sure to drop a comment once again on the White House releasing that headline, brace for higher inflation. I want to hear your guys' comments really bad, and be sure to subscribe to the channel if you find any of this information useful. Once again, my name is Kyle. Hope you have a great day.